Taking a look at rental rates, we've seen that they have sustained their downward pressure, and the move in rates is down year over year, but the decline is decreasing every quarter. And in fact, in some markets, we've actually started to see that turn around. So it'll be interesting to see over the next quarter if that trend continues and we start to see some positive momentum. Same store achieved rate growth has flattened out. And also we're looking at occupancy going back to historic averages. And so when I say historic, we look back at prior to COVID levels, and we're starting to see, that seems to be about where we're finding occupancy right now on average. Taxes and insurance costs, that's one area that we're seeing increases pretty much across the board in a lot of different markets, particularly the markets that have been hit the hardest are Texas and Florida, coming off of all the hurricane activity over the last couple of years. And then everybody's looking right now to see what happens with California after the fires. Acquisitions are picking back up across all the four REITs. When you look at their activity, they were all very active in the fourth quarter. Notably, one of them, CubeSmart, has had a tremendous amount of acquisition activity by buying out their JV positions, but we've also seen well over $400 million in investments from groups like Public Storage and Extra Space, and NSA has also been very active. Cap rates right now for a stabilized self-storage asset, what we were seeing right around the end of 2024 is we're seeing cap rates in the 5.5 to 6.5 range. And then if you're looking at something that's in lease up or a transitional property, we're seeing the cap rates are closer to the higher sixes, maybe 6.75 to about 7.5%. The weak housing market remains the sector's biggest near-term headwind. So with home sales still hovering near multi-decade lows, it's directly impacting the move-in customer segment. So until we see what happens, I think as we get into the spring and the summer, which historically that's the season where we'll see the most housing moves and activity, we're also starting to see interest rates lower a little bit with the 10-year Treasury down. So this type of activity could be positive for housing, but yet to be seen.